I think that it's probably better to just observe a few things. One is Bitcoin has now been around for 15 years, and there has not been a Bitcoin 2.0. So there's no crypto 2.0. This is Bitcoin is the surviving chain. And Bitcoin has become a $2 trillion asset, which never in history, financial history, has anything reached $2 trillion and then disappeared. So it's a different argument if it was $100 billion.
Okay.
The third is the U.S. government has reiterated its commitment to make Bitcoin a strategic reserve asset. That's not bad for the price of Bitcoin. So if someone is watching this and said, well, they don't understand Bitcoin, so they decide not to own it, it's a catastrophic way to look at markets, because we recommended Bitcoin originally when it was around 1,000, and we recommended investors put 2%. And many people said they won't buy it until they understand it. And then we'd spend 2 years explaining to our clients why they should own some Bitcoin. If someone is not going to buy Bitcoin until they understand it, they may end up missing one of the biggest opportunities.
The co-founder of Fundstrat Global Advisors and renowned financial strategist Tom Lee just offered a groundbreaking outlook on Bitcoin's future that you simply shouldn't ignore. His observations, which reverberate with the straightforward yet potent truth that Bitcoin is more than simply another asset, it is altering the norms of finance, have sent shockwaves through the financial industry, with governments and institutions gradually shifting from skepticism to strategic embrace. Tom Lee's most recent discovery underscores a significant shift. Bitcoin may soon become a pillar of the global economy. His research highlights Bitcoin's tenacity, its unrivaled growth trajectory, and the reasons it continues to be unrivaled in its capacity to prosper in the face of uncertainty. The worst part is that there are clear indications of a new financial revolution. Bitcoin's decentralized structure, scarcity, and adoption are turning out to be its greatest advantages as established systems struggle with instability. Lee's remarks serve as a reminder that this is the beginning of a revolutionary period in banking, not merely a passing trend. Be sure to like, subscribe, and hit the notification bell so you don't miss any of our in-depth content. Thank you and enjoy the video.
Fairly simple. Foremost, when we think about markets in any period of time, we take into account what we generally think is the economic outlook.
Okay.
And one thing I think people miss, and those who are bearish, is that companies have been far more resilient than people expected.
Particularly in the U.S., I guess, right?
Yeah, especially in the U.S. Because in the last 4 years, we had a pandemic that shut down the economy. Then we had a big supply chain shock that created a big inflation wave. Then we had the Federal Reserve raise interest rates at the fastest pace in history. And then we had a very controversial election. Yet in these 4 years, companies produced really good profits. So I think we generally look at what we expect the economy to do, and it's been strong. And there isn't a lot of leverage. But then we also realize that U.S. companies have proven to be very strong. So that's our first part of the process. So I think what really helped us the last 2 years was our bet that inflation was going to be a lot softer than consensus. And that kept us...
I know you've been quite aggressive in predicting inflation is going to be under control, right?
Yes. And, looking back, that was the right call.
Okay.
Because the Fed has been cutting rates now.
Sure.
And in the face of many people who thought the Fed had to create a recession. I think the second part of our work is really thinking about what are the important drivers of sort of surprise. We call these thematic models. Yeah. One that we'd been talking about for a long time was the global labor shortage.
Okay.
Since 2018. And we thought that would drive a wave of AI spending.
Okay.
And that's because this global labor shortage happened twice in history. 1947 to 1954 and 1991 to 1999.
I didn't know after World War II there was a shortage. Okay.
Yes. Well, in World War II, the shortage was because of the mortality from all the
that
fighting.
Makes sense.
There was a global labor shortage of prime age workers. Both times technology stocks outperformed. So this cycle we predict or forecast will last through 2035. So that's why we're bullish on technology. Another theme that we spend a lot of time thinking about is what we call impact of generations, and it's really the millennial.
Okay.
They're both the largest generation in the U.S. in history, but also set to become the wealthiest because of wealth transfer. And so we spend a lot of time modeling that impact on the economy.
Okay.
And then, of course, the third is really what I'd call digital transformation and security, energy security. And that led us to Bitcoin pretty early.
Okay.
We've been writing about Bitcoin for the last 8 years.
Yeah.
So that helps us determine what kind of stocks we are looking for.
Okay.
AI, is a coming wave. And that's because it's a quantum improvement in the capability of a workforce, right? Over time, generative AI is going to produce a PhD level worker, and at an unknown cost today, but presumably with a drastic drop in cost, it'll be cheaper than hiring a human PhD.
Sure, yeah.
So it's a huge force multiplier. Along the way, I'm sure 90% of the capital will be wasted, but that happened during the internet build out, and it happened in the wireless build out. A lot of money was wasted. A lot of promising technologies basically fell flat. So kind of expect that to happen. So it's safe to be betting on what they call the arms merchants right now.
Okay. So it's a real thing. And what do you think is the best way to play the long-term AI theme? Is there an ETF or any group of stocks that you would recommend?
The market's pretty good at figuring this out. So I would say the Mag 7 are all in what I call a primary position to benefit.
Yeah, that's true, yeah.
And we know that NVIDIA is got a vast lead over others. And we also know that there's going to be critical shortages of power and components. And so these aren't necessarily the best quality companies, but they're the ones that can deliver power and components quickly.
In spite of obstacles like the pandemic, inflation, and sharp interest rate increases, American businesses have proven remarkably resilient, as Tom Lee explains. These companies have continuously produced high profits, demonstrating their flexibility. He draws attention to the revolutionary potential of AI, projecting that it will revolutionize workforces and open up exciting investment opportunities, with firms like NVIDIA at the forefront of this revolution. Tom also highlights the continuous rise in digital innovation and the growing importance of millennials, who are currently the wealthiest generation. Tom emphasizes Bitcoin's tenacity as a $2 trillion asset and its increasing significance in the financial system. He advises against delaying investments for too long because doing so could prove to be a costly error as Bitcoin's strategic worth keeps increasing. Let's examine Tom Lee's intriguing observations in more detail now. Don't forget to like, subscribe, and hit the notification bell for more in-depth content.
The S&P right now is around 6,000. And we think it's going to go to 7,000 by the middle of next year.
Okay, so the middle of next year.
Yeah. And at the moment, it could change. But at the moment, we think the first half will be better than the second half.
So stronger first half. And
and so the market could run out of steam in the second half.
Okay.
So consolidate. And so we end at 6,600.
Okay.
It's still 10% growth for the index.
Okay.
But
after 30% rally, that's pretty impressive, right?
Yes. But I think that's maybe not as important as people to understand that what we're really saying is that after 2 years of 20% gains, the market probably gains again. Because most people think, well, if 2023 was so good and 2024 was so good, we can't have a good 2025.
Yeah.
The bond market is pricing in 3 cuts next year. So they're expecting the Fed to make 75 basis points worth of interest rate reductions. Now, the current Fed funds is 4.75%. And neutral, let's say, is 2.75. So that's actually 2 percentage points of easing the Fed has to do, which is about 8 cuts. The question that markets have to deal with is how many of those 8 cuts happen in 2025? So they expect 3, which leaves 5 left for the rest of the easing cycle. I think the best case is the Fed to only do 1 cut next year.
Okay.
Because that leaves 7 cuts in the future.
Okay.
Which gives them a lot of firepower. So I would prefer, but it's not a prediction, to see the Fed pause. And the market might initially get worried, but then they'll realize it's quite bullish. I think that it's probably better to just observe a few things. One is Bitcoin has now been around for 15 years, and there has not been a Bitcoin 2.0. So there's no crypto 2.0. This is Bitcoin is the surviving chain. And Bitcoin has become a $2 trillion asset, which never in history, financial history, has anything reached $2 trillion and then disappeared. So it's a different argument if it was $100 billion. The third is the U.S. government is reiterated its commitment to make Bitcoin a strategic reserve asset. That's not bad for the price of Bitcoin. So if someone is watching this and said, well, they don't understand Bitcoin, so they decide not to own it, it's a catastrophic way to look at markets, because we recommended Bitcoin originally when it was around 1,000, and we recommended investors put 2%. And many people said they won't buy it until they understand it. And then we'd spend 2 years explaining to our clients why they should own some Bitcoin, and they still refuse to buy it. So I don't think if someone is not going to buy Bitcoin till they understand it, they may end up missing one of the biggest opportunities.
Tom Lee's examination of the market forces influencing the S&P 500, Federal Reserve policy, and Bitcoin presents a convincing picture. According to him, the S&P 500, which is presently trading at about 6,000, may reach 7,000 by the middle of next year, after which there will be a period of consolidation in the second half of the year. He stresses that even after a 30% surge, a 10% annual growth rate is impressive, even this possible downturn. More significantly, Tom suggests that continuous growth is not only feasible but likely, challenging the conventional wisdom that a string of successful years portends a weaker 2025. Tom then discusses Bitcoin, highlighting its tenacity and distinct place in financial history. With no rivals to challenge its hegemony, Bitcoin has grown to be a $2 trillion asset. He reinforces its long-term viability by pointing out that no asset of this size has ever vanished. Furthermore, Bitcoin's growing significance in international banking is indicated by the historic milestone of the U.S. government's identification of it as a strategic reserve asset. Tom cautions against the mentality of putting off investing in Bitcoin until it is completely understood. He points out that many people were hesitant and hence missed out on Bitcoin's explosive ascent from $1,000. He underlines that waiting for full comprehension frequently results in passing up one of the greatest profit possibilities ever. Tom Lee's observations serve as a helpful reminder to viewers of the value of flexibility and vision in negotiating the changing business environment. His message is very clear. The difference between grabbing opportunities and letting them slip away is being informed and taking quick action. Thank you for watching.